Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today we've got Steve. How you going, Steve?
Afternoon, Ollie. Yeah, let's just don't think about the weekend. Obviously, both of our teams got basically slaughtered. I'm going to blame the rain in New Zealand when it comes to my team. I don't know about yours.
It's no excuse, but a bad week of Aussie sports all over. Piastri is not off to a flying start this time around, but
No.
not here to focus on that. Let's go into the Monday Open. So, for any of our returning viewers, this will all look very familiar, but for any of our new faces into the Open today, this is the normal agenda that we run. So starting out, we'll take a look at the major events from last week, take a look at our key themes and see how these drove prices. We'll then move into the week ahead section where we'll put a spotlight on some of the major events for the week coming up, see how this fits in with our key themes and give our take on where we think prices will go. We'll then move into the technical corner where we'll put a spotlight on a couple key different markets and analyze them using our technical indicators. And then lastly, we'll move into our Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. As well, just want to reiterate to everybody that any of the advice Steve and I give in this video is general in nature, doesn't take into account your circumstances. Any projections we give are not guaranteed, and past performance will not always be a reliable indicator for future performance. So tucking in, we're going to start off with the top traded products up on your guys' screen now. I think the most notable one for me, obviously, we're missing silver, but we've got 3 different oil markets in there.
Yeah, I mean, no real surprise when it comes to the oil markets, but I actually didn't know that so many people actually traded all the difference of oil. So just looking at CL dash oil is basically the futures for crude oils. The UK OUSD is the Brent, as well as the US OUSD is the crude oils, the cash CFD. So pretty surprising that there's so many different pairs, but it just shows a bit of diversity that people want to trade different products. But we'll go on to last week. Obviously, a lot of movers will try to be fairly brief. So the Australian GDP came out higher than expected, but obviously a lot of the headlines was really took down the Aussie overall as a risk-off sort of sentiment. But surprisingly enough, even though it was a risk-off sentiment, we did actually see cryptocurrencies, for example, have a really good week. They found sort of support and really bounced, especially Bitcoin, for example, went down as low as around 63K USD and then bounced up to over 70,000. And then, yeah, it's bounced around a bit, but it's above 70,000 USD at the moment. So interesting that the different dynamics with what's been causing with last week. We did see higher sort of China CPI, so inflation data, as well as the GDP was better in UK. Canada really had a big sort of impact when it comes to their unemployment. The US data, the inflation was as expected. Unemployment claims pretty much as well as JOLTS positive. But all the news is always around what's happening, especially around the US and Iran war escalation. So that's caused, obviously, I think it's the second week in a row. We've seen a lot of volatility, especially in gold markets, as well as oils, and no, no doubt why there's actually three pairs when it comes to oil. But basically, recently, so according to the when it comes to oil, for example, we also heard that locally within Australia, news basically let us know that there's around maybe 30 to 37 days of supply, which is about 2.5 billion barrels remaining when it comes to Australia locally. So we're looking at obviously different sort of reserves from a strategic perspective, as well as yeah, the impact on oil has been pretty significant, as well as what's happening. So Trump, for example, mentioned that he thought the wars are coming to an end, but Iran said they're ready to go on for another 6 months. So pretty interesting to see the different dynamics. What's your thoughts, Ollie?
I mean, personally, I do think we are probably geared up for a bit more of a long-winded battle over in the Middle East. I know Trump's said a lot of times that he's near enough wrapped it up. He's also saying they're hitting historic sort of moments on there, which I don't quite believe. But I have been seeing reports that Iranian officials are considering letting some of the ships through if they are paid into the Chinese yuan, which I do think is quite interesting. But that's telling me that we are likely to be bracing for a bit of an extended period of this conflict. So definitely increases the inflation risk, which I actually do think is having a big impact on the week coming up right now, starting off with the RBA cash rate as well, which is actually looking like they are likely to hike their rates in anticipation of an extended period of war.
Yeah, that's a good sort of point. So really, all eyes on the RBA tomorrow at 2:30 p.m. Australian Eastern Standard Time. So the to give you perspective, the ASIC rate tracker on the 10th of March had a 69% of no change at 3.85, as well as a 31% chance increase to 4.1. As of the 13th of March, and bear in mind, we've also mentioned that the ASIC rate tracker when it comes to interest rates is fairly conservative. So it's actually now a 29% no change at 3.85, as well as a 71% increase to 4.1. So a big sort of contrast. We also saw the Reuters poll, which has shown 23 of 30 economists expecting a 25 basis point increase tomorrow, with NAB and Westpac expecting two, so March as well as May, while ANZ and CBA one in May. But bear in mind that there is no April meeting, and there's been a bit of a friendly competition in the office. Ollie and I on of the opinion when it comes to the economists, but it's a really tough decision, and the thing is that it can go either way, but it's one of those things where if the RBA does sit on their hands, I think it could be one of those things where it's better to, I guess, be safe than sorry a little bit later in case obviously the inflation gets even worse. There are a lot of other sort of decisions that we're going on to. So, for example, we've got the likes of we've got quite a few, but
Pretty
the
much
major
all the
one that
major central banks that we can think of.
yeah, I know, pretty much. But the one I really want to stress is probably maybe more around the Bank of Japan. So although Bank of Japan's likely to keep on hold, it really depends on the statement for key indications of future rate hikes. As mentioned previously, the concern is around the yen carry trade, which is the unwinding of investments in the US like treasuries and US shares, which could have an impact on the likes of the Nikkei, for example. As for the other sort of rates, yeah, I mean we've got the US data, but a lot of the sort of a lot of the actual drivers, especially around gold, for example, with everything that's going on, and just how long it's actually going to be, we're seeing that's really inflationary. So what inflationary means is that potentially, especially with, for example, the US easing cycle, that might be delayed. So even according to CNBC, traders have even taken the September cut off the table for this year and could see one coming in December. So that's been positive for the DXY, which is really now at 100. So it's trying to maintain that sort of level. And there's no sort of additional sort of priced in until well into 2027 or even early part of 2028. So interesting times. Ollie, what's your sort of perspective on the other sort of decisions?
Well, the one that's really sticking out for me is the Bank of England decision. So, if any of you guys would remember, late last year, we did see the Bank of England actually hike rates, which wasn't actually expected at that point in time. It was in anticipation of an increase in spending coming from the UK budget. So, they lifted up rates just to tackle some inflationary pressures ahead of that. But now, with the inflationary pressures coming out from energy and oil, that is, they're looking a lot more likely to be holding rates at this current meeting. This actually could be extended for a few meetings now. They were planning on going into and back into the easing cycle, continuing, but since the odds of that have been slashed, we have been seeing some pretty strong buying on the pound, which is looking quite strong at the minute. Seeing the FTSE 100 pull back from some all-time highs as hopes for a rate cut have been slowly squashed, but there's a lot of volatility in the equity markets nonetheless. But shifting over from one central bank who's not expected to do much this week to another, I'm actually going to move into the technicals. So let me share my screen with everybody now. I'll start off on the Nikkei, as I mentioned. The Nikkei, I do think, does have a very interesting place for the week ahead, given the Bank of Japan is one that everyone will be watching as a result of the carry trade. But starting off, we're looking at the Nikkei on the weekly chart. So we've been in a pretty strong uptrend dating back since April last year, around the Liberation Day times, or when those started to get squashed. And we can see that the bullish trend is being signified by our moving averages, which are all fanned out, evenly spaced, all pointing in the right direction. So a couple of weeks back, we did see the Nikkei trade to an all-time high around 60K, just actually touching over it on the week. And we've had a strong sell-off since, where prices appear now to have found support at its 20-week moving average. We see some pretty considerable top and bottom wicks on the previous week, which tells me there is a lot of volatility ahead of the BOJ decision. Adding to the bearish pressure on here, though, we are seeing the MACD has crossed below its signal and it's creating some divergence away from its signal, which is telling me that there is some bearish momentum for sure, depending on for the week ahead, depending on the data release. So I'm looking for confirmation to see if we are likely to see a further pullback in prices or if we're looking to hold this support level to then challenge towards a new all-time high. Shifting this into the daily chart now and get a better understanding of what we could see. So straight off the bat, I'm seeing early signs of a head and shoulders formation on price, but I'm looking for a cluster of confirmation and a cluster of signals to confirm if this will be the case. I'm seeing the 20-day moving average start to converge on the 50-day moving average. So when that does happen, that typically or historically will act as a signal of a change of momentum. So be keeping a conscious eye on that, as well as the MACD is giving me some bearish signals here. So for the week ahead, if I am a seller in the market, I want to see prices hold this resistance around the 54K here and then challenge to make a lower low on the closing price for last week. And if we do hold this resistance, prices will move further into its moving averages and then could come to look to a retest of the 50K level. I do think also if I'm a buyer, however, I do want to see a break and a hold above this level around the 54K sort of level, which was resistance in January this year. Either way, though, I'm waiting for confirmation of this. So I'll be keeping my risk management strategy in there towards my moving averages as well. So the next market I did want to take a look at is our most top trade product for the previous year. I think that's across all markets. I'm looking at gold. So starting out for gold on the weekly. Similar story for the Nikkei. We can see that we are on a pretty strong bullish trend, hitting all-time highs quite consecutively over the past year and a bit. Can see our moving averages have all fanned out, are all evenly spaced, all pointing in the same direction, which is telling me that there is some very strong momentum on the buying for gold. But When I look at the previous 2 weeks, though, first of all, I'm seeing some convergence on the MACD indicator. So I'll be watching this one for the week ahead. If we see a crossover on the MACD, I'd like to see a bit of divergence with the MACD below its signal line to give me a confirmation that the selling pressure is overtaking. But I also do want to consciously make a note of the 2 red weeks in a row, which last time we did see that was in October. And when we did see that last time, we actually saw prices slowly trade back up and actually didn't look to retest those swing highs for the 8 weeks following. So, obviously, previous price action won't always give a clear indication of what will happen, but I'm saying I am conscious to see if this is likely to happen again. Moving now into the daily chart for gold. So I'm seeing some bearish pressure in here now. Most notably, I'm seeing this swing high. We failed to make a higher high as we had done previously. We've made a lower high on here, but I want to see if the prices here will look to make a lower low on its most recent swing lows, or if it will hold above that level towards its moving averages. If I am a seller in this market, I would first like to see prices break and hold below its next key moving average levels, this being the 50-day, where I'll be looking for an entry to target down to its next key moving average levels. I'll be looking to manage my risk around the opening levels for this week if I am a seller, given that we have actually started off quite well anyways. However, if I am a buyer, I want to see prices hold support at these key moving average levels, at the 50-day moving average, that is. If we can hold this level, I'm still seeing that adding to a sequence of higher highs. So I'll be looking for an entry to retest its most recent swing highs on there as well, with managing my risk down towards these key moving average levels. Okay, so that brings me to the end of the technical section for today. So now moving into the Q&A, where Steve and I will answer some of your guys' most commonly asked questions from last week.
Yes, so question one, beyond oil prices, what are other economic impacts that the US-Iran conflict could have on Australia? So beyond oil prices, like what we mentioned before, we also need to consider the sort of logistics side. So, for example, petrol. I think I saw it yesterday. It was about $2.55. A couple of weeks ago, it was probably $1.66. So, other than obviously, just going around when it comes to driving, etc. We need to also consider logistics, like when it comes to trucks, when it comes to everyday sort of groceries. And for me, my favorite is like the likes of Uber Eats or DoorDash, for example, which means that I'll need to be actually walking to get the lazy dinner or lazy lunch instead of actually, ordering, because there could be sort of markups when it comes to that. So there is the impact of that, and it just means I'm going to be having to order less.
Okay, and I'll take it away for question two. So, what does buy the rumor, sell the news mean? So, this is a type of trading strategy that I think you would have heard in a lot of external commentary. That being online analysts, any YouTubers, any content creators, things like those, or anyone just in and around the markets, you would have heard this term. So, buy the rumor, sell the news. This is a trading strategy where traders buy or sell an asset based on anticipated market news and then close the positions to lock in profits once the actual news has been released. So, you would have heard Steve and I talk in previous videos about how markets will tend to price in moves ahead of the scheduled event due to speculation, which consequently can increase volatility when the news has actually released and sometimes can actually prompt a reversal on expectations. So, as such, the buy the rumor, sell the news aims to lock in profits following the data release before prices can look to reverse. Okay, so I think that brings us to the end of the video today. So thank you everybody for watching. A recording of this will be posted up on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. For anybody who is looking to get involved with the Open and send through any questions, please feel free to reach out in the VIP chat room or to your relationship manager directly. That's all from me today. Thank you everybody for watching, and Steve, I'll see you later.
Thank you, Ellie, and enjoy your evening, everyone.